Okay, hello and welcome to those of you who've just joined us in the training session. Great to have you here with us. So we were just giving a few moments for all of our attendees to join us, but I think there's lots to do and talk about today. So in the interest of time, let's get started. So a big welcome on behalf of myself, Fiona Quinlan-Wells from the UN Sustainable Stock Exchanges team. It's really a pleasure to be with you all here today for the first of our two-part program on gender equality in capital markets. So as I've mentioned, please feel free to introduce yourselves in the chat as we're getting started. We've got a really packed schedule though, so let's get into it. So firstly, a big thank you today to our host exchange, the South Pacific Stock Exchange, for hosting today's program. It's truly a very collaborative training program, as you'll see from all of the organizations represented on the screen here. So a big thank you to the IFC, to UN Women, Columbia University, and the Luxembourg government for all of their support in making this program possible. So, to kick us off today, I'm very pleased to say that we're joined by the CEO of the South Pacific Exchange, Sheraj Obiasekara. So, a big thank you, Sheraj, for joining us, and I'll pass over to you now for your opening remarks.
Yeah, thanks, Fiona. Good to be back here again for our second collaboration on the training front. And a big thank you to the team at UNSSE, UN Women, IFC, and your other partners, the government of Luxembourg and the University of Columbia, for facilitating this training and helping us bring this training to Fiji. As far as SPX is concerned, we, over the past couple of years, have taken it upon ourselves to advocate more and more aggressively and strongly for gender equality in the marketplace and also among our companies.
Sorry to
And we've
interrupt,
seen a good
Sheraj, but we
response.
don't see your video at the moment. I'm not sure if you can put that on at all.
Yep, sorry. Yeah,
Great.
so we've joined a number of initiatives globally, like the Ring the Bell for Gender Equality Initiative and Women in Finance by ADB, to foster that awareness on gender equality. And UNSSE partnership has turned out to be a big part of giving us access to international trainings as well. So good to see a good response. Particularly, it's great to see a number of participants from outside Fiji, in the other Pacific Islands countries also joining in, which is great. SPX has a vision to make our exchange relevant, make our market relevant for that wider audience, and that's very positive for us to see that. And in terms of gender equality, it's a no-brainer that companies that take gender equality seriously perform better. Than there's ample research out there for to back that up. And also, not only performing but also communicating your gender equality initiatives is usually well received out there in the market by stakeholders and by investors. So we do understand that Fiji being still a growing market, advocacy is not effective unless you support it with capacity building. And that's why trainings like today are very important in taking our message to the market and equipping our participants, our stakeholders, with the tools to actually capitalize on some of these initiatives and some of the things that we advocate for, like gender equality. Finally, capital market stakeholders do have a lot role to play, along with the exchange, the regulators, listed companies, and other stakeholders, in leading this and championing gender equality within our ecosystem. Even a listed company can also help cascade this message down to their subsidiaries, for an instance, and suppliers, and etc., and start at requesting and advocating for greater gender equality. So I hope today's training would be useful in that context, and I hope that there is something that all of us can take away from it. I wish the training well, and I wish the presenters well as well. Thank you once again to UNSSE.
Thank you so much, Sheraj. And I think already some great points highlighted there for setting the context for us very well. So many thanks for those opening remarks. And then we're also pleased to be joined by a second speaker who's present locally in the market. So a big thank you also to Alison Davidian joining us from UN Women. So Alison is the representative for the Fiji Multi-Country Office at UN Women. So she's working on programs across Fiji and a number of Pacific Island countries as well on the topics of gender equality, of course. So a big thank you as well, Alison, for being with us here as well. And I'll pass over to you.
Thank you so much, Fiona, and a big thanks to the South Pacific Stock Exchange for bringing us together today. It's wonderful to see so many people online. I wanted to start, a few weeks ago, I visited Raki Raki Market, and while I was there, I met a woman called Liti. And Liti had been there, since very early in the morning, selling the vegetables that she had grown herself. And she told me that she wakes up, 4:30 a.m. before sunrise, prepares her produce and travels to the market every day. So by the time most of us have started work, she's already put in the hours. So Lydia is really running a business. She's managing costs, she's negotiating prices, she's supporting her family, and she's already part of the economy. But she's doing it without access to finance, without a safety net, and with very little influence over the systems that shape her work and shape what she's able to do. And so what struck me most after I had spoken to her was that Liddy and thousands of market vendors like her are not waiting to be empowered. These are women that are already doing the work. So what they lack is not effort. It's access to capital, to networks, to systems that recognize their work and their value. And so the conversation that we are having today, the training that we have, has to begin there. Because when we're talking about gender equality and capital markets in the Pacific, what we're really talking about is whether women like Liti and thousands like her, whether they can move beyond survival and participate fully and meaningfully in the economies that they are already sustaining. Globally, we have a growing recognition that where capital flows, it matters, and investment decisions shape not only markets but our societies. And we have so much data and so much evidence that shows that when women are able to participate in the economy in the same way as men, economies grow and GDP increases. And one of the figures that is often quoted is a report that was done by McKinsey, and it shows that advancing women's equality could add up to $12 trillion to global GDP. This is not peanuts, $12 trillion. So when women are included, we know businesses are stronger, they're more resilient, they're more sustainable. But the reverse is also true. When women are excluded, the economies underperform. And in the Pacific, because our economies are smaller and interconnected, the consequences of exclusion are immediate and it affects livelihoods, resilience, and economic stability almost right away. And so the question, are we integrating gender into capital markets? That is one way to put this question. But maybe a better way to put it, and what we're really asking, is whether our financial systems reflect the reality of our economies, or do they continue to exclude those that rely on them? And so this is where institutions like the South Pacific Stock Exchange have such an important role to play. Not only is it a platform for investment, but it's a shaper of the market itself. How investment pipelines are defined, how risk is understood, and whether gender equality is built in from the start or it becomes an add-on at the end. The rules you set, the standards you promote, the signals you send really influence where capital flows and who benefits from it. At UN Women, we're working with partners across the region to shift gender equality, to shift it from being seen as just a social, not just, but a social issue, to being seen for what it is, which is also an economic and financial issue. And ensuring that women are not only participants in the economy, but that they're actually decision makers in it, and aligning finance with the reality of our economies. And so today is an opportunity really to do that and to ask the questions that we need to ask. What would capital markets look like if they truly worked, not just for men, but for men and women in the Pacific? What are the entry points for change? And how do we ensure that this leads to a shift in how systems actually operate? Frameworks and policies, yeah, they matter. I mean, we work on them all the time and they're a crucial part of the answer. But the real test is whether women across the Pacific can actually access the capital they need to grow, to lead, and to contribute fully to our economies. They're already doing the work. The question is whether the systems around them will meet that effort or continue to rely on it without support. Because the truth is, tomorrow morning, Lydia is going to be back at the market. She's going to set up her store. She would have already woken up at 4:30. She's managing her business. She's carrying responsibility, not just for herself, but her family and her community. And she's going to show up just like she shows up, and thousands of women like her show up every single day. And the question is whether the systems around her will finally catch up. So with that, thank you so much. And I'm really looking forward to the discussion. Back to you, Fiona.
Fantastic. Thank you so much, Alison, for such a great thought-provoking context setting for us there. I really appreciate your remarks, and I think an excellent challenge to us all as we move through this session as to how we can really connect that back, as you say, to those real-world impacts for those across the world. Okay, fantastic. Thank you so much. So with that, we'll move now into a few introductions from my side, just to the training content today and how our session's going to work. So as we've talked about, today's training is really about that interface between gender equality and global markets. So as you may already feel or know, gender equality and finance, of course, can be both sensitive and complex topics. So rather than pretending that complexity doesn't exist, what we're aiming to do in today's training is to better understand it and identify how we can move forward. So today's session is looking particularly at understanding those complexities and in our second session a bit later in the week, we're going to get into more action-oriented mechanisms for advancing gender equality and addressing those complexities. So in terms of the kind of practical side of things, just to note that everyone in today's session is muted as a participant, but that doesn't mean we don't want your participation. So it's great to see so many of you already sharing in the chat, your comments and introductions. So feel free to continue to do that as we move throughout the session today. However, if you've got any particular questions for the training, we really encourage you to put those in the Q&A box, which you should also have available at the bottom of your toolbar there on Zoom. If you put your questions in the Q&A, it just ensures that we don't miss those in the chat and enables our presenters to respond to those directly. So really encourage you to ask your questions, but just make sure to pop them in the Q&A box there. And how our session will work today is that we've got a 2-hour session. As I've said, we love to take your questions, so please do continue to ask your questions as we move through the session in the Q&A box. We've got a number of experts who I'll be introducing shortly who'll be available to answer those for you. As I've already said, we really encourage your participation in the session. So as well as the chat and Q&A, we're also going to be using a couple of different tools, including Zoom polls and Mentimeter as well, which we'll introduce to you shortly. So encourage you to take part in those exercises as well as we move through the training. And finally, if you take part in our 2 workshops this week, you'll be able to receive a CPD certified completion certificate for taking part in our course. So to get your certificate, you'll need to fill out a feedback survey, and we'll share the details with that at the end of our second part of the training. Another important thing just to highlight is that the training presentation from today's and Wednesday's sessions will both be available to download from the event page for today's session. So thanks, Landon, for sharing the link to that in the chat. So if you go to that page and the resources section at the bottom, you'll find today's training presentation, which will include links to all of the resources that we're discussing and sharing with you in the chat throughout the session. And you'll also find our guest speakers' presentations there as well. And we will add the recording of our training to the same location after the training as well. So just to introduce who's going to be speaking today. So as you know, I'm Fiona, and I'm pleased to be joined today by my colleague, Landon Wilcock from the SSE team as well. And alongside us as well, it's great to have with us Antoinette Santos, who's the program analyst for the Gender Action Lab project with the UN Women team based in the Philippines. So big thank you, Antoinette, for joining us as well. And she'll be speaking to us a bit later in the program about introducing the women's empowerment principles. And also following up on that in our second session, we'll have another colleague joining us from UN Women as well. And then at the end of today's training, we've got a guest speaker presentation as well from Eureka Murasawa, who is a sustainable finance analyst with the Bloomberg kind of sustainable finance and data team. So Eureka will talk to us a bit about the work that Bloomberg are doing to incorporate gender equality into their approach as well. So as I've already mentioned, we know that gender equality can be quite complex, and we should see it that way and approach it in an understanding of that complexity. But to guide us through that, we've broken this training down into 4 clear steps that can help individuals and organizations as they're addressing this complexity and considering how to enhance gender equality in their operations and processes. So you'll see on the screen that 4-part structure that breaks down our program. So firstly, we have part 1, which covers preparation, and alignment. And these first 2 steps, we're going to be really focusing on understanding what gender equality is, why it's important, and providing an overview of some of the main standards and guidelines that you can use to guide your performance on this topic. And then in our second part of the program, we're going to be digging into action on Wednesday. So that will move us through into the implement and communicate steps you see on the screen there. And to help us achieve those kind of different areas, we've got 2 clear learning objectives that we've set ourselves for today. So firstly, to understand why action is needed for enhanced gender equality. And secondly, to identify what tools you can use to help you to improve gender equality in your organizations. And that just shows you our agenda for our training today of how that time will break down across the session. So we'll spend an equal amount of time on our 2 modules there. We'll take a short break in the middle to refresh ourselves, and then we'll wrap up at the end with some time for questions and next steps. Okay, but to get us started, it would be great to get a sense from you all as to how much you already know about these topics, and also get used to using Menti, which we'll do a couple of times throughout the session. So thanks, Landon, for sharing the link to Menti in the chat. So you can follow that link that Landon's just shared now, and I'll also share my screen so that you can see another couple of ways that you can join us in Menti. So as we've said, you can click that link that Landon's just shared in the chat. You can also use the QR code that you'll see on the screen now. And finally, you can go to menti.com and enter that 8 number code that you're seeing at the top of the screen there as well. But our first question, as I've said, is just to get a sense of how much you already know about those different learning objectives that we have from today's session. So how comfortable would you be currently in your own knowledge of the connection between gender equality and capital markets, on discussing this topic with others, and on perhaps taking action to improve gender equality in your organizations? So thanks for those who've responded so far. Encourage as many of you as possible to join us in Menti. We're going to come back to this a couple of times throughout the session, and yeah, it's great to always get your input. So thanks for those who've already joined us, and yeah, encourage you to do so if you haven't already. Great. I can see so far from those who've responded actually that we feel quite likely to take action. So that's fantastic to see. And maybe some comfort already in how to discuss this, but least familiar maybe with that connection between gender equality and finance. So of course, no problem. That's what we're aiming to dive into in our session today. So thanks everyone for letting us know that. Okay, so I'll leave that open for you to continue to vote on. Just to note, we'll use the same link for Menti throughout the session. So if you keep that tab available to you in the background, we'll come back to that a bit later in the session. Great, but moving on from my side now, let's dive into our first module, Prepare. So in this module, we have 3 main aspects that we're hoping to look at with you. each narrowing a little bit further in on the topic. So we'll start by being clear really on the terminology that's going to help us communicate gender equality. We'll then move on to narrow in a bit more and look at what the case for action is and the purpose of action is. And then we'll finally finish off by looking at market trends. And for this unit, we're going to be looking specifically at how markets are doing in terms of gender equality progress currently. But let's kickstart things first with our section on language. And so we'll go back to Menti now, in fact, if you already had Menti open, just to kick off this element. So let me reshare the Menti screen again. You've got that link that Landon's already shared with you in the chat, and I'll move on to our next question for you. Great. So if you can let us know, maybe in a couple of words, one word, if that's all that comes to mind, what you currently think of when you think of gender equality, that would be really helpful. So there's no right or wrong answers at this stage, really just getting a sense from you all as to what first comes to mind here. So we see a couple of words coming through already. Thanks for letting us know. So men and women, power, balance, equal representation. Really interesting. So already some senses, I guess, of the socio-political elements of this term, and how much is tied up in that is a really interesting thing to share. So thanks, everyone. So what else are we seeing? So we're seeing socially constructed. That seems a very interesting thing to highlight as well. Orientation, equality coming up quite strongly there in the center. Some people mentioning kind of biological elements about sex and male and female. We'll get into that in a moment, but we really emphasize probably a little bit more around those social aspects of the definition here. And that actually is a little bit different, but we'll dive into that shortly. But we're seeing identity, balance, I think equality, representation are all great words to highlight. So thanks, everyone, and lots of good ideas already. So clearly, already lots to think about here as we're just seeing already from the different terms that we're highlighting. Okay, fantastic. So great to get those views from you. And we're going to return now to the slide presentation to look at an official definition. And so I'll hand over to Landon now, who's going to take us through that section.
Great. Thanks so much, Fiona, and welcome again, everyone. It's great to be here with you today. And as Fiona said, we're just going to take a few moments to run through kind of our working UN definition of gender. Of course, you all had some great answers there, but to make sure that we're all on the same page, we want to understand the depth of gender, which is not simply sex, being male or female. And the purpose of this initial exercise is really to make sure that we all understand that gender is not the same as sex and that gender can differ in different contexts and societies. This is important because it's not really different sexes we always need when we talk about the values of gender diversity. It's actually different ways of thinking, different life experiences or lived experiences, and different institutional restrictions or freedoms. So while the term gender is actually quite difficult to define across all contexts and societies because it means something different to all those different people, we'll briefly get a better idea of what is included in this complex term. With that, UN Women defines gender as the social attributes and opportunities associated with being male and female and the relationships between women and men and boys and girls, as well as the relations between women and those between men. These attributes, opportunities, and relations are socially constructed and are learned through socialization processes. They're context and time specific, and they're also malleable or changeable. Gender determines what is expected, allowed, and valued in a woman or a man in a given context. And in most societies, there's differences and inequalities between women and men in responsibilities assigned, activities undertaken, access to and control over resources, as well as decision-making opportunities. Gender is part of the broader socio-cultural context, And another important criteria for sociocultural analysis can include class, race, poverty level, ethnic group, and age, and many others. As such, we can see gender is not quite as simple as just male or female. Gender can be influenced and defined based on the nature of certain relationships, based on hierarchies, on history, on context, and on institutions or norms. And most importantly, when we're discussing gender equality today, please remember that we're referring to equality of the genders, not simply just increasing women on boards, even though that's something we will discuss a lot today. So feel free to explore this and other gender equality terms on the Gender Equality Glossary we'll link to on the UN Women page. So we'll dive a bit deeper now. I'm sure some of you have heard of the acronym DEI. It's often talked about, and this stands for Diversity, Equity, and Inclusion. And we're increasingly seeing DEI managers or leads or even teams and organizations that focus solely on ensuring an organization's DEI performance. So you might ask, why not just have diversity teams or equity teams or just inclusion specific teams? And when we dive a bit deeper into how these concepts interconnect and relate to another, you'll see kind of the importance of having all three of these terms together as part of the full equation. So let's start with equity. This is ensuring that there's equitable power distribution among people. You can think of equity as providing women and men with the same microphone that amplifies their voices to the same extent so that everyone can hear them equally, which many might be thinking, well, that's the objective of, of the DE and I together, isn't it? Well, not quite. It's part of this picture. Let's say, for example, that our objective is equity, so equal power distribution, but there's no woman in the organization to fairly distribute that power to and give that microphone to. So that means we also have to focus on diversity. And with that, diversity is focused on ensuring representation. So the act of inviting the unrepresented or underrepresented gender to join the board would enhance the diversity of a board, and then there's someone to hand the microphone to. Think of diversity as having enough seats at the table for diversity to be represented at the table. Again, differences in different lived experiences are important to organizations, so it's not enough to have microphones at the table to make sure everyone can speak at the same volume. We also need enough chairs at the table so that a diverse group of participants are there at the table and willing to speak. Now, if we just have these two, however, we can have cultural assimilation take place where we expect, for example, women to act just like the men, and then we'll struggle to perhaps keep the woman on the board, and then we won't be benefiting from the diversity that we actually aimed to achieve. So it's no good to give someone a microphone if they're also not willing or able to speak, or alternatively, to claim to someone by giving someone the power to speak based on their appearances alone is achieving diversity. When the objective of diversity is to include diverse ways of thinking and diverse lived experiences. This is why we have the third part of DEI, inclusion. So inclusion refers to the behaviors and the practice of making all members of an organization feel welcomed, giving them equal opportunity to connect, belong, and grow, to contribute to the organization, advance their careers, and feel comfortable and confident being their authentic selves. Now, to bring it all together, the D, E, and I, we can say that diversity is being invited to the boardroom. Equity is then having the empowerment and ability to speak at that board meeting, and inclusion is being listened to within the meeting. Of course, this goes much further than the boardroom, and it should be considered organization-wide and at all levels of an organization and all teams. So the end goal of this is then equality. This depends on all three circles, as you see on the screen, diversity, equity, and inclusion coming together. We can have diversity without equity or inclusion. and it won't be sustained. Equally, we can have equity without diversity, and we won't make real progress. So when we talk about equality today and in the next session, especially when we talk about the benefits it brings, remember that we're not simply looking for an equal number of men and women on boards or in organizations. What we really want is these three things: diversity, equity, and inclusion. So now hopefully we're a bit more clear on some of these key definitions. We'll move into our next module. So why does gender matter? Which I'm sure we all already have some good thoughts on. But it's important to highlight that, of course, equality between genders is indeed a human right. So it's widely documented that women and girls experience adverse impacts of business activities differently and often disproportionately. They also face additional barriers in seeking access to effective remedies. Moreover, because of multiple forms of discrimination, different women and girls may be affected differently by business activities based on their age, color, caste, class, ethnicity, religion, language, income level, if they live in a region, or sorry, a rural region versus an urban region, disability status, sexual orientation, literacy, their access to economic resources, their marital status, migration status, indigenous or minority status. So there's a lot of factors there, a lot of different aspects that can influence how someone is treated, their lived experience. But what that is all to say is that humans are complex beings with many elements that make up their unique identities. And as such, this is naturally a complex and interconnected topic. The document you see here on your screen now is the UNGP on Business and Human Rights, or UNGPs, which are global authoritative standards to prevent, mitigate, and remediate business-related adverse human rights impacts. We flagged on this slide a few of these principles to help understand the obligation that businesses have. The first principle, Principle 14, highlights that all businesses, including SMEs, small and medium enterprises, should take appropriate steps to respect human rights. That's independent, regardless of their size, sector, operational context, ownership, and structure. The second principle here is number 16, and that encourages businesses to express their commitment to meet their human rights responsibility through a statement of policy. Another principle we wanted to flag is Principle 20, which highlights that to verify whether adverse human rights impacts are being addressed, businesses should track the effectiveness of their response by using sex disaggregated data. And you'll hear us discuss that term a lot in today and the next session. Finally, Principle 21, this particularly highlights the important role of communication. Both the information and the means of communication should be responsive and adequate to gender discrimination and the differentiated impacts experienced by women. What's important to consider from a financial perspective is that in addition to, of course, being the moral and the right thing to do and having a positive impact on society, organizations should be considering the repercussions associated with violating the human rights of employees, partners, and stakeholders. And policy or legal and the reputational risks are also important risks to be considered for gender equality and social related disclosures as well. We link here a bit more of the principles and the full document if you would like any more detail on any of the relevant principles here to gender equality. It's also important to note that sustainable development depends on equality of genders. You probably recognize here the image as the United Nations SDGs or Sustainable Development Goals. Gender equality is here on its own, so gender equality is the SDG 5, but it's one of the 17 SDGs agreed to by UN member states, but it also contributes to all the others as well. For those that are maybe not aware, the SDGs represent an ambitious end to or attempt to end poverty, protect the planet, and improve the lives and well-being of all of humanity. And well, there's a specific SDG 5, as mentioned, it cuts across all other SDGs, and aspects of gender equality also appear in the targets and associated indicators of 10 out of the 17 SDGs. And if you want to see how gender equality links to the different SDGs, you can have a look at Annex 3 of the SSE guidance on gender equality for exchanges. Now, that was a bit more of the morality and the human rights element of advancing gender equality. But some might also ask, what does improving gender equality directly do for society? Well, studies have shown that we have more equality of genders in society. We also see lower levels of violence, greater economic productivity, and increased resilience against financial and also environmental crises. I want to remind you that by gender equality, we don't want to imply more women than men, but equality means that both women and men are represented, have the same level of power, and are both heard and understood equally. However, to achieve equality, in many cases, we do need to provide some extra supports to the less represented gender, which is often women in many contexts. To give you an example of the extent of impact that gender inequality currently has on society, this is perhaps the same study my colleague mentioned here at the start from UN Women. But we note from the World Bank estimates the loss in human capital wealth due to gender inequality at over $160 trillion. That's quite a staggering amount. And another study concluded that the equal participation of men and women entrepreneurs could boost global GDP by approximately 3 to 6%, which again is a huge amount. To read a bit more about this, I recommend checking out the links in the slide in the handout. And I just want to go back to some additional benefits we've seen of promoting gender equality of genders. So we've seen positive social, environmental, economic, and business benefits, as mentioned. And if we narrow a bit deeper into the benefits that companies can find from enhancing equality in their organizations, we can see that companies with higher levels of diversity, both gender and ethnic, at the executive level are found to show higher performance than their less diverse counterparts in terms of both profitability and long-term value creation. We also see that different genders have different attitudes towards risk. So if our decision makers, like the board and leadership team, are gender diverse across an organization, that can lead to more balanced decision-making processes. As well, different genders, as mentioned, have different experiences in the world, and therefore to have different ideas and views they can generate and help guide them with decisions. Pardon me. And then companies with workplace policies that support and promote gender equality are better able to attract and retain talent. As well, according to data from Parallel Finance, investor demand for gender lens investing has continued to grow in recent years, and we'll see some data on that. And companies with more diverse boards and senior management teams demonstrate better environmental, social, and governance performance, or ESG, including having more ethical business practices, enhanced workplace and workforce policies, as well as stronger community relations. I want to take a moment to talk through a brief study, and this is one of the many studies on this topic where we see a bit more detail of the benefits that gender diverse companies are seeing. This is a study from FP Analytics, Independent Research and Advisory Division of Foreign Policy. The study looked particularly at industries that are traditionally male-dominated, analyzing over 2,300 publicly listed companies around the world, and they did over 100 in-depth interviews. The study found that companies with more women on their board have on average a higher profit, greater transparency, and higher social ratings. Briefly, we'll look at those three stats. First, on profitability, the study found that the companies with the highest percentage of women in management were on average 47% more profitable than those with the lowest. And those findings are in line with other evidence that promoting gender diversity can benefit a business's bottom line. A study by the International Labour Organization, or ILO, We saw women interviewed for the study detailed how they're leading their organizations on new revenue generating paths, advancing innovation in inertia-prone industries, and advocating for harm reducing practices and increasing transparency to build stakeholder trust. On that element of transparency, we also see that building trust across stakeholder groups and including employees, consumers, regulators, and investors, we know that's vital for industries that are working to evolve their business models, improve regulatory compliance and performance, and respond to consumers' always changing needs. And the study found that the companies with the highest percentage of women on boards are more transparent in terms of ESG information disclosure. And in particular, companies with at least one woman on the board are 17% more transparent than those with zero woman board members. Finally, on CSR, or corporate social responsibility, the analysis found a positive correlation between gender diversity on corporate boards and companies' social responsibility performance. Women interviewed for this study provided many firsthand accounts of their efforts to protect safety and labor rights, integrate community development into their decision-making and business strategy, as well as building local capacity and empowering women. Remember also that we discussed a few slides ago that diversity and equality can have important societal and environmental impacts. So another interesting aspect of this same study was that equality not only had an impact within the company, but also for the environment in which it operates. So we saw in this study, for example, more diverse boards were 39% more likely to reduce emissions. Let's see, 46% more water efficient and 60% more energy efficient than their peers with less gender diverse boards. In your handout, you can find a couple more studies if you'd like to dive a bit deeper into the subject of the internal and external impacts of gender diverse leadership. And we'll also share in the chat a publication from IFC on gender responsive climate governance and the role of women leaders in promoting and advancing work on climate change, which I know is, of course, very relevant in the context of Fiji. And with that, I'll turn it back over to Fiona.
Great, thanks for that, Landon. Okay, so in our next segment now, landscape, which rounds off the prepare module, we're going to have a look at the case for gender equality, and kind of round off by really talking through the state of play. So Landon's talked us through that case, as I said already, sorry. Now we're going to move into understanding where we're at now globally on this topic, particularly in the context of exchanges and companies. So we're going to go back to Menti to get us started on this and test our knowledge again. So I'll reshare my screen now so that we can see Menti together. And that link will be in the chat as well to allow you to find the question if you haven't already gotten into Menti. So the question we have now for you is really to get a sense of how many years do we think it will take for the world to achieve gender equality? So you can select any option here from sort of 10 to 100, 500 years. But basically, on our current progress, how long do you think it's going to take for us to achieve gender equality? So I'll give you a moment to have a little think about that and let us know your answer. From those, let's have a look. We see 25 of us have responded so far, but let's see how many of us do we have in the session. I think it's quite a few more than that. Yeah, we're well over 100, so I think lots more of you haven't joined yet. So it'd be great to get your participation in the exercises if possible. So please do join us if you haven't already done so. Let's see, we've got a lot of responses, I think, in the somewhere between 10 and 100 range on the whole. And actually quite a lot of you, I think, between 10 and 20 years, some around the 50 mark. Maybe the length of the scale we've given you is a slight hint that it is a bit higher than that, but I'll give you a few more seconds to let us know what you think before we show you the right answer. Great. We're up to now 50 of you who've taken part. So thanks everyone who's joined us in Menti. Okay, so yeah, it looks like most think somewhere under 100 years, but unfortunately, the correct answer is a lot higher. So 285 years is the figure we're using here, which comes from work by our colleagues at UN Women. And that report that they have published highlights that it will be, almost 300 years at our current rate of progress before we achieve gender equality. So there is, of course, an important note that this measure can differ a little bit depending on your methodologies and what you consider here. But ultimately, I think regardless of whose data we're using, it's clear that overall we're not at the current rate of progress going to see gender equality achieved in any of our lifetimes. So quite a stark conclusion, I think, there. And then let's have a little bit of a look at this in the context of companies. So we've done some research at the SSE on this topic, comparing the kind of percentage of women in senior leadership positions in companies across kind of the main listed markets globally. So the question to get us started is, what percentage of CEOs from listed companies in the G20 do you think are currently women? And as I said, this draws from SSE research, which we're going to show you in a second. So you might be familiar with that American study that went viral that indicated that there were fewer large companies run by women than by men, specifically named John. Obviously, a sign that there's still a lot of progress on gender equality to achieve in the American context. But that study, as I said, was just for America. How do you think that figure would vary globally? So we don't unfortunately have Fiji specifically captured in our data here today, but perhaps as you're answering this question as well, you could reflect on how you think that figure would vary for Fiji. Maybe you can share in the chat if you think it would be higher or lower than the global average. Be interesting just to get your thoughts. But from those who've responded so far, I think we've got a mix across the range, but somewhere it looks like the most common answer is 30%. Quite a lot of you going somewhere between sort of 10 and 30% overall. So let's have a little bit of a look. So the correct answer is just 6%. So again, quite low. I think we'll all agree there. It does vary across the markets a little bit, and Landon's going to talk us through that data in a moment. And then the second question is the same question, but for board seats. So what percentage of seats on boards in the G20 do you think would currently be held by women? And maybe do you think would that be higher or lower than what we just saw for CEOs, which was 6%? So take a moment just to have a little think before we go through the answers and the data. So again, I think a lot of people may be going a little bit lower this time after having heard that statistic we just had on CEOs of 6%. But somewhere between 0 and 20 looks to be the most common. Maybe some thinking it could be a bit higher than the CEOs perhaps. So let's have a look at the right answer. Well, actually, a little bit more optimistic, I guess, in that sense, in that we have 25% of board seats across G20 markets currently held by women. So higher than the CEO number for sure, but obviously a long way from gender parity in terms of representation. Okay, great. Thanks everyone for taking part in giving us those guesses. So we're going to go back and look at that research more closely now and see how the picture varies globally. So I'll pass back to Landon for that.
Great. Thanks so much, Fiona. There we go. Okay. So for those of you who might not have seen these publications before, the SSE, in collaboration with the IFC and UN Women and some other partners, have worked together to provide markets with an overview or benchmark of current progress on gender in leadership of listed companies. And we'll dive a bit deeper into some of those reports. The first report I want to show you is our last year's report, Gender Equality in Corporate Leadership. And this was covering the G20, and we break down some regions into some regional groupings as well. On the screen now, oh, there we go. You can see the first section of the report, and this covers the G20. We'll also share the link to this publication in the chat so you can check it out in your own time And all these reports can, of course, be found on the SSE publications page. The aim of this data is to act as a benchmark for exchanges and other relevant organizations and institutions in their efforts to promote women's full and effective participation in and equal opportunities for corporate leadership positions. Unfortunately, I'll note that Fiji is not currently included in the research. I hope this changes and is possible, though, in the future. Now, this first table we see on the screen here shows that the average percent of boardroom seats held by women in the G20 is about 25%, with an overall positive trend line. There's only a few markets you see here, for example, New York Stock Exchange, that decrease year by year. And in case you can't quite see it, the top 5 exchanges in the G20 are in France with Euronext, the UK with LSEG, Italy, USA, and more so in your region, Australia. It's also worth noting, given that France leads the leaderboard for the G20, the France has a regulatory requirement for women on boards of 40%. So even though the percent of women on boards in France is among the highest in the world, they didn't have the strongest women executive leadership pipeline. And for that reason, back in May 2021, the French Parliament voted to introduce gender quotas for executive leadership. They set 30% minimum for either gender by 2027 and 40% by 2030. So we see here with last year's report, they increased to 45%. I believe in our 6 years of reporting, that was the highest percent we'd ever seen at Euronext or any exchange, actually. And we see many countries improving slightly each year. We also see a few sliding backwards. And then we can also see some with quite a long distance to travel. For example, Saudi Arabia there at the bottom of the G20 with, I believe, just 6%. And then I want to note that only 6 markets in the G20 have no all-male boards among their top 100 issuers. So with this research, we, of course, always look at not just the number of women on boards, but then what number of those listed companies have just men on a board. So with that, Australia, Canada, South Africa, USA with NASDAQ, and Japan, as well as LSEG from the UK, they had no all-male boards, which is positive to see. But in 7 markets in the G20, we still have more than 20% of the top 100 issuers with male-only boards. Let's look beyond the G20 and we'll look at some regional data as well to get a better approach on how some regions of the world are faring on gender equality and corporate leadership. So here you can see Europe, and just to note, for these regions, we select the 5 largest stock exchanges by market cap. So that's why you'll see not every single market, of course, listed in these regions. So for this region of Europe, we see 38% board seats held by women, and you see just only 2% of all male boards, which it should be 0, but 2% is still quite low. But then again, going back to the point Fiona was discussing, even in a market with 38% board seats held by women, you still only see 8% female board chairs and only 7% female CEOs. The next region we include is US-CanZ. It's a bit of a unique region. So that combines Australia, USA, their 2 exchanges, Canada, and your not too far away neighbors, New Zealand, with 34% women on boards. Here we see still 2% all-male boards and 9% female board chairs, and again, 9% female CEOs. So again, you see quite a steep drop-off, even going from board seats held by women to the boards actually being led by the woman. The third region is Africa. Now we see a big drop. It goes down to 25% board seats held by women. Then Southeastern Asia with Malaysia, Thailand, Philippines, Singapore, and Indonesia with 22%. And here you see a big increase with 17% all male boards in this region. In Eastern Asia, we see 17% board seats held by women. In Latin America, you see 16%, and then in last place, Western Asia, with just 9% board seats held by women. Here you see the highest amount of all male boards, with almost half of boards being only men. And then here you also, of course, see the lowest scores in female board chair and female CEOs. So in the in the slide handout, you'll find some additional data here looking at the regional picture with some additional data. Now, I want to discuss a natural element here that should be discussed further, which is barriers to progress. So, of course, there we saw some regions doing well, some not so well. So, I'm curious, in the case of Fiji, or perhaps you want to go beyond Fiji. I saw some other Pacific Islanders from Tonga, Samoa, PNG, etc., joining us. So, perhaps in the region, the Pacific Island region, or just in Fiji, if you're from Fiji, what do you think are the barriers facing your organization or your country to advance gender equality in corporate leadership? I'd love to hear some of your thoughts. If you just want to put them in the chat, what do you think are some barriers that you're facing in your region, in your country, to advance corporate leadership and women representation in corporate leadership? I see right away we have Ashna noting gatekeepers, male and female. Okay, interesting. Shivnil notes culture. Oh, thank you, Randy. So we see Randy. Randy just sent us a note noting that for SPX's listed entities, 26% of the board seats are occupied by women and 10% of CEO positions are held by women. So thank you for sharing that. That's really helpful data. And perhaps I'll connect offline with you, Randy, about if there's a way we can include your data going forward in our report. But anyways, back to the barriers. So here we see a narrow leadership pipeline. Namnita noting for Fiji some barriers for corporate leadership for women includes toxic work culture, leadership mindset. Sierra notes power imbalance, mindset. Nilufa notes your AG is a woman, so that's a positive sign. Okay, that's great. Yep. Women in big leadership positions is fantastic to see. We see a lot more comments coming in on social norms, culture, gender pay gaps, which we'll discuss a bit more as well. Okay, so I'll leave it there, but a lot of good ideas and good perspectives on what barriers exist in Fiji or perhaps the region. So I want to take a moment to discuss some of these in a bit more detail, more so some that weren't mentioned or weren't discussed or brought up. So one that I don't think was mentioned and an example of a barrier facing greater equality in corporate leadership that we often see is the limited availability of sex disaggregated data and inconsistent reporting practices, which make it difficult to measure progress or understand the extent of the gender gap. And in turn, this creates challenges in identifying effective interventions to close the gaps. I'm not sure if this one was mentioned, but there's also can be a lack of training and professional development opportunities, particularly in areas of frontline operational or financial responsibilities, and that can hinder women's attainment of qualifications. I think this was mentioned a little bit, the lack of gender-sensitive human capital management, including in hiring, retention, and promotion processes, such as using non-diverse hiring committees and limited use of gender-blind applications that can lead to decisions based on gender biases rather than on actual merit qualifications. This one, of course, was mentioned a lot, biases and stereotypes. and specifically biases and stereotypes that suggest women don't have the characteristics needed to lead, such as logical thinking and decisiveness, or also creating a double bind in which women are expected to be nice or competent, but they can't be both. They can't be nice and competent. And those biases are more subtle than the norms that deliberately exclude women. And those can actually be these unconscious biases can be much more challenging to call out and overcome. I think this one may have been mentioned, but the lack of awareness or skepticism about the business case for gender balanced leadership, which can mean that initiatives to advance women may not be a top strategic priority for companies. And then I would say to all the men joining this call and all the men in leadership, that's really an important role there for men in leadership who have embraced the values of diversity and inclusion to help elevate the importance of such initiatives and drive action on gender equality because, of course, we have an important role here to play as well. And then I think limited access to network and connections was mentioned. I think also someone noted the lack of access to role models, mentors, coaches, and sponsors. Those not having those can stunt women's leadership potential. I don't believe this barrier was mentioned, but unsuitable work environments in traditionally male-dominated industries such as utilities or energy, which can make it difficult for women to pursue long-term career paths. For example, if you're on a work site without a dedicated women's changing facility or dedicated women's bathroom, which unfortunately often happens in traditionally male-dominated spaces where it's expected per se that it's only men on the work site, so you don't need a woman's change room. Well, then you're not creating an environment in which women can feel comfortable and safe coming to that work site. Another one is safety concerns in operational locations and work sites, and gender-based violence and harassment, which can represent serious deterrents to women's professional advancement and, of course, their safety. And gender-based violence and harassment in the workplace and domestic and sexual violence experienced beyond the workplace also affects women's well-being and business operations. So those experiences can lead to reduced productivity, increased absenteeism, and higher employee turnover. It can also deter women from pursuing the promotions and career development opportunities that are stepping stones to those senior leadership positions. It's important to note that achieving a truly gender diverse senior leadership team and optimizing the true value in diversity is about more than just the sheer numbers, than just the pure data percents, and more than just gaining parity in representation. The key is ensuring that men and women have equal voice and agency once they're in their leadership roles so that they all can contribute to determining their organization's path. And to increase the number of women leaders and prepare them to take on leadership roles, companies must also truly invest in women in their business. That means attending to the culture and the purpose of their organization. And it also means adopting a more people-focused business model as part of an approach that integrates an ESG orientation into all aspects of operations. Now, we don't have much time for this topic today, but if you want to dive a bit deeper into reasons for lack of progress on gender-responsive climate action, I recommend checking out a publication from IFC on gender-responsive climate governance, which looks at why we aren't seeing the level of progress on gender equality we'd like to see in the context of climate action. In other words, what barriers are getting in their way, which speaks to a lot of the points we've just discussed together. Now, with that, we're going to take a pause so that you can take a quick stretch, grab a cup of coffee or a tea, and as well, I'll use this as a reminder that please feel free to use the Q&A box or the function, and then we will reconvene in just 5 minutes. Thanks, everyone. Okay, I know that was a quick break, but we'll get started again because we have lots more to get through, and I want to make sure we end on time. So, with the first part, we of course were able to get some initial concepts clear and some different definitions and start to better understand some different elements like the barriers and all this sort of thing. But now we want to dive a bit more into the content and start with how we can enhance an organization's performance on gender equality. So the objective of our next unit, Align, is to ensure that your practices align with the global best practices and standards, as well as any local or peer practices that should guide your efforts. Let's begin by looking at the global principles that companies can use to enhance their practices on the topic. And the global standards we're going to discuss today are the UN Women's Empowerment Principles, or the UN WEPs. So before we go into a bit more on the principles, we wanted to get a sense of your current familiarity with the WEPs. So let us know, is your organization already a signatory of the WEPs? Yes, no, or maybe you're not sure or you don't know currently. Okay, so I'm seeing a lot of no's and a lot of I don't knows. If you're not sure yet, that's okay because hopefully after today you'll be able to reach out to someone knowing a bit more and reach out to someone in your organization and encourage that your company becomes a WEP signatory if you're not yet. I'll give one more second and then we'll end it there. Okay, so we can see that there's actually a lot of no's and I don't knows. Often in these sessions, there's actually a lot more yeses, but that's okay because hopefully after today, if we did this again in, I don't know, a month or two, there will be a lot more yeses. And if your organization is not already a signatory, after today, you'll have more information about how to become one at the end of this section. But with that, to help educate us a little bit more, we're very lucky to have with us today an expert on the UN WEPs. As was introduced at the beginning, Tony is joining us from UN Women today to help provide an overview of the WEPs and answer any of your questions about the principles. Before she gets started, though, I want to play a quick video to help introduce the WEPs a little bit more.
Think about the impact of a signature. Think about the magnitude of a global movement. Think about the difference you can make and the power of transformative change. By signing the Women's Empowerment Principles, you can galvanize your shareholders and stakeholders to drive change in the workplace, marketplace, and community through a framework of 7 principles. Brought to you by UN Women and UN Global Compact, the Women's Empowerment Principles are a roadmap for business sustainability, innovation, and productivity. Businesses by the thousands and in every sector are becoming part of this world-changing movement to advance gender equality. Businesses that become models for attracting talent, entering new markets, serving their communities, and measurably improving the bottom line. Because gender equality means better business. Don't miss this moment to make a lasting impact on your employees, suppliers, customers, and investors. Join leading companies already on the journey to greater sustainability and growth. Commit to the Women's Empowerment Principles and make today your organization's signature moment.
Great. Okay, with that, welcome again, Tony, and I'll turn it over to you.
Thank you, Landon, and happy to be here. I'm happy to see some web signatories, although a few. And to those who answered no or I don't know, we hope you can use this time together to either refresh your memory or to learn more about the webs. And by way of introduction, again, my name is Tony. I'm a program analyst from UN Women Philippines, and I'm very delighted to be part of this training to go over the women's empowerment principles or the webs with you. So with the rising importance of ESG and consumer interest as well as economic potential, many of these companies are now realizing the importance of integrating gender equality in the business model. And yet, many are unclear on how to go about it. So for us, the WEPS it's a holistic framework for companies focusing on 5 pillars of action. So that's leadership and governance, workplace, marketplace, community, and tracking and reporting. So that companies are using WEPS as a blueprint. They position gender equality in the core business strategy as well as through their operations and beyond. And the Women's Empowerment Principles, or WEPS, is the only framework to provide this holistic and comprehensive guidance. And companies that join the WEPS community, they make a public commitment on a global platform and they embark on the web's journey. They have access to tools and resources and they engage with UN Women. So I will go over the 7 principles one by one. And these principles are not organized in sequence of importance. So the first principle is on governance, strategy, and gender responsive leadership. It builds on a solid foundation for the web's work that we do, and it requires the commitment of the CEO and the buy-in from the executive team to make gender equality a whole of organization approach or priority. We are not only talking about appointing more women in senior leadership here, but rather CEOs and the leadership team and the board commit to and lead the implementation of the WEPs, and by making gender equality and women empowerment a top strategic priority. So for the second, third, and fourth principles, these focus on the workplace pillar. From respecting human rights, adopting or amending policies to remove discriminatory, biased, and stereotypical practices, to equal pay for work of equal value. It also includes anti-sexual harassment policies and providing equal training and advancement opportunities for both women and men. Then the fifth principle focuses on the marketplace pillar. So a lot of web signatories globally are working on internal changes, but we are encouraging companies to go beyond that. So companies can influence their marketplace by investing in women-owned businesses, from procuring from gender responsive companies, creating gender responsive marketing practices, and more. So Principle 6 also focuses on the role of companies in the community. So we encourage initiatives and advocacy that make a real difference in women and girls' lives. And we invite all companies to actively consult and engage with women and girls in local communities before rolling out certain initiatives and ensuring that their voices are shaped and that it's included in the process and that they truly benefit from the outcomes. And lastly, Principle 7 of the WEPs is an underpinning principle to measure results, because for us, what gets measured gets acted upon, or what gets measured gets done. So companies are encouraged to regularly collect data to understand progress over time, and we encourage companies to also report on webs.org, because the WEPs website has a reporting function in their sustainability reports and other channels. So this slide shows you where the WEP signatories are based, and the map illustrates that the WEPs is a global agenda. So CEOs from over 12,000 companies already in all industries and sectors and in more than 180 countries have made public commitment to the WEPs. So becoming a WEP signatory is about going to a journey to achieve gender equality. So it's not just a tick box exercise or a checkbox exercise. So companies need to work on engaging internal and external stakeholders and make ongoing and meaningful progress. And when doing so, we encourage companies to tackle deeply rooted systemic inequalities rather than just taking the easy road and ad hoc activities. So the image on the slide shows you the steps after committing to the WEPs and being accepted into the WEPs network. So after consideration and signing. So let me explain what these mean. So first is activate. Activation is where your commitment becomes action. And this is the step that begins with honest reflection, understanding your strengths, identifying areas for growth, and addressing gaps. So through web self-assessments and the creation of your web's action plan, you lay the groundwork for lasting impact on gender equality across your business. Second is engage. Engagement is about broadening your impact. So as part of the WEPS network or community, you have the opportunity to involve your employees, your business partners, your clients, your customers in building a gender inclusive ecosystem and value chain. And by fostering dialogue and collaboration, you extend the reach of your commitment beyond your own company. So that means driving change that is collective, sustainable, and transformative. So next is sustain. Sustaining progress means ensuring that there is accountability. There's tracking and you're analyzing your results by collecting gender statistics and communicating your progress. Lastly is report. Transparency and accountability are key and is the heart of the WEPs to sustaining progress on gender equality and women's empowerment. And by reporting on your results and by sharing both challenges and your successes, your company is not only demonstrating impact, but also strengthening your trust among stakeholders. So as you lead by example and scale your efforts, you inspire peers across industries and geographies to take action. So in doing so, your company helps shape a global movement where gender equality is embedded in business practice and drives long-term transformative change. So this may sound really a difficult process, but no need to worry because at UN Women, we offer more than 200 tools and resources to guide you and the companies on how to work on the WEPs. So the next question is how to apply or how to become part of the WEPs network. So your company needs to be legally registered, and we accept all companies from all sectors, sizes, and ownership types. If you're eligible, you can go to the website, that's www.weps.org/join, then fill out and submit the application form. So everything is online. The form is self-explanatory, but if in doubt, you may find the step-by-step guidance also on our website. So the Web Secretariat will review each application and get back to you within a certain number of days. It's usually 10 to 15 business days. And again, for more information, you may visit our website. That's www.weps.org for that. And that's all from my end for now, but I will come back later for more examples. And for now, I will hand over to Fiona or Landon. Over to you. Thank you.
Great. Thanks so much, Tony. It's always great to have an expert from UN Women and to run through the WEPs. And it's a great introduction. And again, we recommend that all of those looking for a great first step on this topic, you start by working with your leadership to become signatories of the WEPs. And for those that are already WEP signatories, of which I think there's more and more every time I check the website, we wanted to also flag what you can consider doing next. Let's see. Oh, there we go. This slide here highlights one of the options available, which is taking your commitment a step further by having your gender equality practices certified. EDGE certification provides a certifying service that can help you to take your practices that additional step further and also provides a communication tool to show the market that you're a leading company on gender equality. And in our next session together, we'll have a member of the EDGE team joining us as a guest speaker, and we'll hear more about this then. With that, I'll turn it back over to Fiona.
Great. Thanks very much, Landon and Tony, for that segment. So we've looked there at that global perspective in the context of the women's empowerment principles, as Tony just talked us through there. And now we're going to have a look at what should be considered at a more local scale within the company. And of course, one of the key factors to start with when you're considering this is looking at where your company is listed and what regulations therefore apply to you. So let's talk for a second about what we're seeing from a regulatory perspective. So one question we often get asked at the SSE is whether or not quotas or mandatory requirements work, and if this should be implemented in a particular country. So on the slide here, we're seeing an overview of the markets where there's some kind of rule governing women's representation on corporate boards, which comes from a recent publication that we launched at the SSE. And so in this research, we reviewed 193 member states, and we identified three broad categories of rules. So mandatory minimum rules, mandatory disclosures, and voluntary targets. And mandatory minimum rules were identified in 25 markets, mandatory disclosure requirements in 24 markets, and voluntary frameworks in 16 markets. And so the research identified significant variations in the design and application of board diversity rules across jurisdictions. So rules differ in their legal basis, ranging from legislation to stock exchange rules or non-binding guidance, as well as also differences in their structure, scope, and enforcement mechanisms as well. And so, whilst board diversity rules can play an important role in increasing women's representation, the experience we're seeing from across markets here demonstrates that mandatory minimum rules don't automatically guarantee success because there could be weak enforcement, inconsistent application, or maybe limited compliance as well. And overall, that can significantly limit the impact of these types of rules or quotas. And so if you'd like to dig a bit deeper into that topic, you can find a few extra slides available in the handout of the presentation here, which give you some insights from a recent study conducted by UN Principles for Responsible Investment on this topic as well. But as we've seen there, and as we're looking at in the data that we've talked about at the start of the session, sometimes these types of quotas work and sometimes they don't. Well, why is that? Well, it's not necessarily the only reason, but a part of this is because it really depends on how each company implements those quotas. And what actions are taken by the company will really determine how a rule or regulation is then interpreted and applied in their organization. So we're going to come down now to the company level to see what we mean by this and what we mean by how a company implements this and do a bit of an exercise together. And so for this exercise, we're going to be using two fictitious companies here. One's called Peacock PLC and one is Owl Inc. We've made up these companies, but labelings to have this discussion today, but we're basing this research from real companies and their experiences as well. So in this example, we're going to say that both of these companies have only 10% women on their boards and in executive leadership, but that they both have a fairly equal gender representation in the operational levels of their organization. So it's already clear that there's something stopping women from getting into higher level leadership roles. There's another thing that both organizations have in common in that they've both had a change in leadership and have had new CEOs join their organizations. And so we'll say that both CEOs are expecting a new regulation to come in, and so they're preparing for a mandatory rule relating to gender equality. But they're also both passionate about taking action on this topic. And so they want to take action to improve their performance as well. However, this is where the differences start to appear. And we see that the companies take quite different approaches towards achieving that goal of gender equality. So we'll talk through their two different approaches. So firstly, if we start with Peacock PLC, so as I've said, they have a new CEO, and this CEO has decided to set a bold target of achieving 40% of women's leadership in 2 years' time, so a big change from where they're at currently. The CEO themselves is a woman, and they make a big announcement to share their experience of climbing the ladder. And they try to use their own experiences to provide a positive example to encourage other women to follow her to the top. Alongside this, they decide to set a hiring freeze for any men until the target is reached, unless particular roles are approved on an exceptional basis. So overall, there might be some employees who are feeling excited about the big ambition that the CEO has set and sharing her experiences. But of course, there's going to be some potentially mixed reaction to this announcement because there are likely to be some women who'll now feel more scared and pressurized that they need to advance and grow their careers or they need to leave the organization. And also, perhaps there might be some men who have job security concerns, of course, as well as a result of that hiring freeze. So perhaps a bit of a mixed sentiment to that news. And so now we'll see that our second company, Owl Inc., decided to take a few different steps to achieve the same goal. So there's also a new CEO at Owl Inc., as we've mentioned, and they've also set out a strong commitment to gender equality in leadership. But instead of setting that big target, they decided to join an organization called the 30% Club. So, if you're not familiar with the 30% Club, it's a group that calls on its members to commit to at least 30% women's representation on their boards and in executive leadership teams. And 30% is seen as important because this is the critical mass at which minority voices start to become heard. So, although they want to surpass this 30% goal, they've joined that organization to help gain some experiences and work alongside other companies who are taking action here. But they're not really sure of the root causes of why women are not advancing in their organization. And so, to address that, the CEO decides to set up a task force to identify those root causes and try to put in place some measures to address those barriers. And at the same time, they also initiate a reverse mentoring program. So we know that 50% of the workforce is women. So why is it that they aren't advancing in the organization? And so the aim of the reverse mentoring program is to enable the leadership to be mentored by more junior colleagues and hear their experiences. That will help them to understand these issues better and also to get a better perspective on some of these issues and gain from that experience their more junior colleagues have. So we've heard about a number of different options that companies might have there to advance gender equality in their organization in the two case studies. And now we're going to have a go at ranking those items and seeing what we think about how effective they would be. So if I could ask Landon just to reshare the Menti link again, and I'm going to share my screen now to show you the question. Move to the next question. Okay, sorry, just let me post that link again in case, there we go. Thanks very much. So the question now is those different types of activity that we just heard about, maybe you could have a think about which you think would be most effective from those different actions. So you can rank from top to bottom, with the top being the most effective and the bottom being the least, what you think about those different activities we've heard about. So I'll give you a few seconds just to have a think and let us know what your ranking would be. So we heard about setting a 40% target. We heard that more real world role model experience of sharing examples. We heard about initiating a hiring freeze. We also heard about a reverse mentoring program and having a gender equality task force or joining the 30% club. So yeah, have a go and see what you think in terms of what's most effective there. So I see we've had a few of you vote. I'll give it a little bit longer for a few more of you to let us know what you think before we talk through those results. Okay, give everyone a few more seconds, but it looks as though we're starting to see a little bit of a picture emerging. Okay, so it's interesting to see setting a target of 40% women coming out as actually the most effective action that most of you think here. We're then seeing creating the task force and sharing examples. But we think perhaps maybe the less effective things would be the hiring freeze, the 30% club, and maybe reverse mentoring as well. So that's quite an interesting perspective, I would say. So I think the 40% target is quite an interesting one. So we're going to come into that in a moment when we go back to our company case studies. But I think ultimately, obviously, having a clear target that's got a number against it, of course, is going to drive a certain amount of action. But we would question perhaps how effective it might be in the long term about driving sustainable change. Because we might see perhaps, a change in the absolute number of women in leadership positions as a result of that. But if it isn't accompanied by the right actions, policies, cultural changes, it might not be that change can be sustained. If you remember that diagram we talked about earlier in the session about diversity, equity, and inclusion. So maybe just setting a target on its own probably will increase diversity. But if it isn't accompanied by the practices that really drive women to feel more integrated in the organization, to enable their voices to be heard, we might not be able to keep them in those leadership positions. So interesting, I think, to see the view on that. We would, I think, agree that having that task force is likely to be a really good idea because, of course, getting to the heart of what the problems are will be key to putting in place the right measures to solve them. And then it's interesting to see as well, maybe that the hiring freeze comes out as the lowest ranked idea here. Of course, I think we would definitely highlight that there are some challenges with something like a hiring freeze, because again, similar to having that target, although it's quite a concrete action and is going to drive probably quite quick change, we'd question how sustainable that change would be because, again, we're going to see probably some negative cultural implications from that hiring freeze. And, it could have some unintended consequences there. Great. Thanks, everyone, for sharing your perspectives on that. So we'll go back now to the case studies to have a look at how we think that could have played out for our two companies. So if we start with Peacock PLC, if you recall, they were the organization that set that target. They shared their examples and they set the hiring freeze. So what we think could have happened here is that they probably did see some immediate progress after setting those kind of strict policies. But because they hadn't identified the different root causes, they didn't necessarily have that much success in promoting women. And they also demotivated men in the organization and made them feel like they had less job security. And so that was probably potentially a negative thing there. So although the CEO had good intentions, because they weren't aware of those root causes and they didn't really address them, they didn't get to the heart of some of the barriers that they had in place. So, for example, they had a working culture that was still quite male dominated. They didn't have benefits that supported women, and there were some unconscious biases that they hadn't addressed as well. But if we flip back to Owl Inc., we felt that maybe their approach might have reaped more rewards. So they took a more holistic approach and probably did have to invest more upfront, it's important to recognize. But what they achieved from that is that they really started to understand through the task force and through the reverse mentoring program some of the barriers that were in place that were struggling to keep women in the organization. For example, they didn't have very good family-friendly policies. They had quite inflexible working arrangements. Their benefit processes were somewhat biased. And so they were really then able to drive the right measures to lead to change and to help sustain the role of women in the organization. And so we think as a result of this, they're likely to have received better results because ultimately they were going to save resources from not needing to have external hires. They were going to have more motivated individuals in the organization who felt empowered to stay and drive their careers. And they were likely to get more innovative solutions coming through from that reverse mentoring program to help them drive the right action. So just to summarize there, I think hopefully what we've kind of illustrated with that example is that, of course, a regulation is really an interesting thing to have in place. It may drive progress. But actually, if we have a quota, but we don't have the right cultural activities and approach to implement it within an individual organization, of course, we might not see the right change. And so that's where it's really important for companies to get to the heart of what the barriers are and put in place the right measures to tackle those. And so we've just highlighted on the screen here a few different initiatives that organizations might want to think about as they are working through their approach on this topic. Okay, so I'll just, I think we'll do this poll quickly. I know we've got a few things still to cover, so I'll just do the poll quite quickly, but I'll launch that just to wrap this section up. So the poll we have here is, how should your company improve its financial performance relating to gender equality? So we've got a few different ideas here. Could it implement policies that promote gender diversity? Should it create an all-women board? Could it collect gender disaggregated data? Maybe only promoting women until you reach equality, or maybe setting gender-based targets. So I'll give you all a few more seconds just to have a little think about that before we have a look at the right answer. Okay, just a couple more seconds. All right, let's end the poll there and I'll share those results with you. So, indeed, it looks like most of you got this right. Options 1, 3, and 5 there were the right answers. And what we'd really say here is that it's important to have all three of these things, not just one together. So, for example, if you just set a gender-based target, but you don't have the policies to ensure that women are supported to stay in leadership roles, and you're not collecting that data to better understand why less women might be applying for those promotions or leadership roles, then you're probably going to miss the root causes of the problem and will struggle to reach equality. And so that's really where we need that equation again of having equity and inclusion to achieve diversity. But of course, as we've highlighted, the goal here is not around just favouring men and excluding women, because that will probably have negative results as well. So it's important to take a sensitive approach to that issue. Okay, great. Thanks, everyone. So that moves us in now to the last section of the Align unit, which is looking at some particular company level peer practices. And so to get us started on that, we'll bring you back to Tony, who's going to talk through some particular case studies and resources here. Thanks, Tony.
Thanks, Fiona. And I'd like to share some examples on implementing the WEPs by web signatories. So let's start with the workplace pillar. So a leading bank in Sweden tackled the gender pay gap across its 16,000 employees in Estonia, Latvia, Lithuania, and Sweden. Now, to ensure fairness, this bank introduced a job evaluation system that is regularly updated and compared roles across the organization. So this approach allowed them to measure and monitor pay equity effectively. And the bank's initiative is backed by close monitoring and regular reporting, which has strengthened transparency and accountability. So a next example would be a textile manufacturer in Pakistan. So they invested a large amount of money to provide an on-site childcare facility for their workers to use. And as a majority of the factory workers are women, with young children. And of course, they require childcare. And yet they found that no one was actually using the facility. So the company then consulted their employees and found out that the standard norm in the community was for the children to stay at home with the grandparents or the extended family, who are the main caretakers while the women are working. So the company then changed its approach and instead offered childcare subsidies, which is welcomed by the employees. For the next pillar, which is marketplace, an example of this is a financial platform in the US or the United States. They had a goal to boost the amount of lending to women entrepreneurs, especially from small businesses, providing them greater economic resilience and independence. So they created a specific fund that looks into improving the flow of capital to women-owned businesses and lowered the cost of their capital. And next example would be a group of companies from the global watch and jewelry sector. Now, from brands and suppliers across over 18 countries, they participated in a gender-responsive procurement pilot led by UN Women. And as the first industry-wide effort to embed gender equality in supply chains, this pilot mapped key gaps in procurement. By moving from company-level pledges to collective action, the initiative sets a precedent for a whole of industries that can really transform global supply chains to advance gender equality and women empowerment. And the companies are currently pursuing the second phase of the pilot, where we are co-creating a gender-responsive procurement tool, supplier questionnaires, and codes of conducts and more. Also like to reiterate and to reshare that we have a lot of resources to stay ahead, and we offer over 300 tools that can help you on your web's journey as our future web signatories. And we have various case studies, such as the one we have shared earlier, more case studies, templates, and thematic guides, learning modules, and more that helps you to be one step closer to your gender equality goal. So here are some of the WEBS tools that we would like to share with you. First, we have the Gender Action Plan module, which is a roadmap for the process of developing a gender equality and women empowerment action plan. So in combination with the WEBS Gender Gap Analysis Tool, or GAT, the Action Plan module also helps companies embed gender equality into its strategy and operations. And we provide a Gender Action Plan template for those interested in creating one. Next would be the Gender Responsive Recruitment Checklist, which has been developed to guide companies to practice gender responsive recruitment. It can be used for your in-house human resource or HR department, as well as for outsourced recruiting firms and headhunters to guide your company towards more inclusive recruitment. And this guide is available for web signatories. And last would be the Gender Responsive Procurement Assessment Tool. It helps companies to advance gender equality in their marketplace by helping them assess if the procurement policies and practices are gender responsive. And we encourage web signatories to use this tool themselves and to invite other suppliers to do the same, and thereby amplifying impact across the whole business ecosystem. And all of these tools are again available on our website for web signatories. That's all from my end, and throwing back over to you, Fiona. Thank you.
Great. Thanks so much for that, Tony. Super helpful to finish with those practical resources. So much appreciated. Okay, well, fantastic. So, as we're coming towards the end of the session, we've heard there about a number of different benefits that companies can gain from taking action on gender equality, and a number of different drivers that might exist for them to be interested in this topic. And we know, of course, that one such driver is the increasing interest in this topic from the finance and investment community, with gender equality increasingly a factor in the assessment of a company's overall ESG performance. And so, here to talk to us a little bit more about this, very pleased to be joined by Eureka from the Bloomberg team. So thanks for being here, Eureka, and I'll stop sharing my screen now so that you can share yours, but over to you.
Thank you. 1 second. Okay, great. Hopefully you see my screen.
Yeah, all good.
Yep. Thank you. Hi, everyone. Thank you for having me today. My name is Eureka from the Bloomberg Sustainable Finance Data Team. Today, I'll be going over the topic of gender equality in the space of ESG scores. To begin with, financial markets participants struggle to efficiently identify and assess ESG risk and opportunities due to an overwhelming amount of ESG content, lack of standardized definitions and frameworks, and challenges evaluating financial materiality and impact from those frameworks. Bloomberg's ESG scores are built on a materiality-based framework to help solve these struggles. Furthermore, research shows that gender-related topics are financially material, which is why it is a key part of our ESG scores. We will go through financial materiality in ESG scores, followed by focusing more on the gender equality space, and lastly, share a little bit about the corporate web portal tool. The backtesting by our research partners in Bloomberg Intelligence shows that women on boards can reduce volatility and support returns, but results vary by region. Diversity funds also have a low volatility benefit that offers downside protection. Analyzing results from January 2013 to 2026, it was found in Europe companies in the first quintile delivered the highest return. Quintile 1 or Q1 represents stocks with the highest share of women on board, while Q5 are the lowest on a sector-neutral basis. Screening for metrics such as more women on boards means less volatility across many regions analyzed, suggesting that the strategy may reduce risk and offer downside protection. Though there isn't a relationship between gender and returns in the US, volatility was considered lower as the share of women directors increases. A similar low volatility benefit was observed for diversity funds, with many outperforming during market downturns. Returns higher for companies with more women on boards compared with many outperforming during market break downturns. This is just one example of financial materiality. To dive deeper into this topic, see the first link listed in the table on the bottom right here. To learn more about financial materiality in our ESG scores, read the research in the other rows of the table. From our ESG score function, we can view the company's Bloomberg ESG score we have calculated based on the data scraped from companies' public filings. ESG scores on a 0 to 10 scale are validated and refreshed typically every month. However, it is important to note that the underlying data fields that are used to calculate the ESG scores are updated live, in other words, in between the monthly refreshes. Our scoring methodology considers over 30 risk factors and dozens of sub-issues, organized into a clear hierarchy, leveraging hundreds of curated sustainability data points that have been deemed financially material by industry associations and standard providers such as the Sustainability Accounting Standards Boards or SASB, as well as the Bloomberg Research. To give you a better idea of what all of this means, let's go over a simple case study together. Firstly, think about the company's high-level social factors at play and any biases you may have. For example, which companies may be more advanced on their gender equality journey, which may have more policies or initiatives to promote equality in the workplace. Now let's dive deeper with the Bloomberg data, looking beyond the perceptions to see how data can support your decision making. One question we often receive is, where does gender fit into ESG? Is it in the S for social or G for governance? What you're seeing here is Bloomberg's S and G scores and how it appears on the Bloomberg terminal. Here we have company A and B scores separated into the green and yellow boxes. Bloomberg calculates the overall ESG pillar scores, the weighting, percent of how much of the data is disclosed, and lastly, an indicator comparing against their industry peers. Just looking at this, we can identify that company A in green is leading in the social score, whereas company B in yellow is leading in the governance score. As shown here, each S and G pillar looks at a variety of data fields, not all directly relevant to gender, but some of the fields most related to gender include social supply chain management and board diversity. It's evident that gender doesn't necessarily fit perfectly into a specific ESG pillar. We see the G part is universal in critical fields like percentage of board of women, but in social fields, financial materiality was found to be more industry specific by researchers. Let's take a deeper look into some of the data points that make up the former screen. The data fields you see here are a part of the S&G scores that we previously reviewed. These data points were captured from publicly disclosed company reports like the CSR report, ESG reports, annual reports, and etc. Starting at the top, the table shows the talent pipeline throughout different levels of the business. There are some fields related to the support and policies available in the workplace that may or may not enable gender diverse talent to succeed. In the table, we see that company A has more women in the pipeline, however, less disclosure of available benefits. On the other hand, company B is a little less advanced in their pipeline, but provides more disclosure in their gender-related data. In short, although we can't tell which company is doing better, it's evident that just because company A has more women on board, it doesn't always mean it's the best place for women to work, if, for example, there are a lack of policies and benefits in place. The overall purpose of this brief exercise is to hopefully challenge some of your initial perceptions and also to give insight into what data investors are looking at to make decisions. Even if a company is performing well in one area, such as their social or governance factors, it doesn't necessarily mean that they are completely well advanced in gender inclusivity specifically. Hopefully you have a better view of the kind of data you may wish to encourage your listed companies to disclose. Now we'd like to introduce a few offerings Bloomberg provides to companies, especially to ones that do not have access to our Bloomberg terminal. To ensure corporates can learn, view, and inquire about the Bloomberg ESG scores and associated data points we capture, Bloomberg has launched the ESG corporate web portal. Upon logging in, corporates can gain a better understanding of the Bloomberg ESG scores, review what ESG data has been collected from companies' public filings, inquire about any data points by submitting the correct value with the public report, which will be reviewed by the Bloomberg ESG data team. Currently, this portal only supports our Bloomberg ESG scores. Any company under our Bloomberg scoring universe can make one institutional account for free at the link on the right here. Feel free to create an account and explore this tool. On this next slide, you'll see an example of what your screen will look like after you log in. A few key points to highlight are you can download and get access to the scoring methodology documents, such as the Bloomberg ESG scores overview and scores methodology and field information, which can be used to further understand the score. In the table section, you will be able to view the hierarchy of the scores from the input data up to the score field, sub-issue scores, issue scores, pillar scores, and the overall score, as you see here. When reviewing the data, you can challenge the data points if you do not agree or think the values are missing, which can be done using the pencil icon as you see at the bottom right here. So lastly, I'd like to conclude with this powerful quote, "You can't manage what you don't measure," emphasizing the importance of data transparency, not just to analyze performance, but to better understand the data and unlock opportunities for improvements by being face-to-face with the data. Please feel free to get in touch with our team at esgcorporate@bloomberg.net to learn more about the data collected by Bloomberg and the scores. Thank you very much, and back to you, Fiona.
Thanks so much for that, Eureka. Really appreciate it. I think that really helps to show, I think, how the effort that goes into sort of collecting and reporting these things can be really helpful in terms of that connection to the investment and finance community. So thanks very much for sharing with us. Really appreciated. Brilliant. Okay, so this is bringing us up now just towards the closing slides of the session. So from my side, just a few key things really to close up and recap the session. So firstly, we'll just pop back to Menti for one final time now. I think what's really helpful when we're going through a training program and we're probably hearing about lots of different things that might be of interest to us to follow up on, or maybe that resonate, but maybe we won't be able to, take forward everything, is to distill maybe one activity or takeaway. So it'd be great if you could share with us maybe what your main takeaway is, or maybe some one thing that you plan to take forward to action or to investigate after today's session. So someone's mentioning policies here. Okay, great. Got some good things coming in here. Reverse mentorship, more women in leadership roles, reverse mentoring a couple of times here. Looking into the policies again. A couple of people mentioning policies. Fantastic. Thanks everyone for sharing. That's really great to see some of those ideas already. Having a task force on the women's empowerment principles, I like that. Looking at more structured reviews of your hiring practices, maybe carrying out a survey. Great. Lots of good ideas. Okay, and then just a second question and final one in Menti before we wrap things up. We just wanted to revisit those learning objectives that we set ourselves at the start of the session and get a sense of how comfortable we feel in these different areas now. So at the beginning, I think we were feeling most comfortable on taking action, but maybe a little bit less familiar with our knowledge of gender equality in capital markets, and maybe somewhere in the middle about discussing this topic with others. But from those of you who are responding, I see quite good scores across the board now, maybe still the most confident on the bottom two and a little bit less on the top. So we'll keep going with that topic in our second session on Wednesday, of course, as well. So hopefully help you to continue to build that knowledge there. But thanks for letting us know, and good to see, I think, a bit of an improvement. Okay, a couple of final slides just to share from my side, just to wrap up our session today. So firstly, just to mention our certificates for the training program. We know that there's a lot to cover in our training and it's a big part of your day and week to give over. So just to note, if you join us again on Wednesday for the second part of the training, we will be able to give you then a completion certificate for taking part in our program. And I just see a quick question on the agenda. On Wednesday, we're going to be focusing on communication and implementation of practices in the company. So we're going to be particularly looking at some practices relating to how companies can appeal to investors and access new financial products, and kind of what the financial markets are doing on gender equality as well to answer that question. And so a big thank you to our guest speakers who've joined us today. So particularly to Eureka from Bloomberg and our co-facilitator, Antoinette from the UN Women team for being with us as well. Much appreciated. So just to say, you can find the contact details for all of the organizations involved in our training in the slide presentation available on the webpage. But all that remains from me is just to say those final thank yous, and to particularly thank as well the SSE official supporters who help make this program possible. And of course, particular thanks to our partners and hosts for today's training, to the South Pacific Stock Exchange team, to Sheraj and Randy for joining us, and to your colleagues who've helped make today possible. And of course, a final thank you to our training support partners, IFC, and the government of Luxembourg as well. So big thanks everyone for joining us. We look forward to seeing you again on Wednesday for the second part of the training. But otherwise, we wish you an enjoyable evening in Fiji, and we'll see you again soon. Thanks all.